How satisfying it is to have a trading plan that you strictly follow, and when you make predictions based on that trading plan, you're most likely to be right. Welcome to the Profitable Traders. In this video, I'll show you the trades that I took using the same trading plan, the predictions that came true, and my predictions for next week. If you want to be one of the profitable traders and be notified with valuable contents every week, then hit the subscribe button and the notifications bell. Without wasting more time, let's get started. What you see on the chart here, guys, is the prediction that I have for next week. And before I go into the analysis of this prediction, let me first show you the prediction that I made a few weeks back, which was on Aussie New Zealand. On Aussie New Zealand, I made a prediction where the market was exactly here where there's a vertical line. And I have a video clip that I will show you. So watch that video clip to be a proof that I actually made this prediction. Since this market has broken above this level of structure, I'll be looking for this market to come back here and find a reason to go up. Or if it breaks below this level of structure, I'll wait for it to come back up here and look for the reason to continue to the downside. The market was exactly here. What I was expecting from this market was a pullback to this level of support and expect the market to go to the upside, at least before it continues to the downside. And when the market came to this level of support, there was a rally to the upside, making more than 100 pips. So how did I make this prediction? Was it just a guess, or am I a psychic? No, it wasn't a guess, and neither am I a psychic. It's based on a trading plan that I have backtested in the historical data and found it to be profitable. And this trading plan is what I'm going to show you in this video. So what I do is to go to a daily time frame, or let's say a higher time frame. I say a daily time frame because I trade using 4-hour or 1-hour time frame. So I go to a higher time frame and identify my key levels of structure. And the key levels of structure that I identify are the recent level of structure that has been formed and the level of structure that has been tested multiple times. In this case, we have a level of structure that was formed recently, and if we scroll further to the left, we have this level of structure. It was tested multiple times in the past. So let me extend this level. So it was tested here as resistance. It was tested here as resistance, resistance, resistance here, and resistance here. And every time the market came to this level of structure, it made a push down, a strong push down, made a strong push down, made a strong push down. And finally, when the market broke above this level of structure, what I was seeing now was this level of structure that was resistance before will likely to act as support now. So the market broke above this level. So what I was waiting for now was this market to come to this level of structure and gets pushed down to this level of structure, which was resistance before, now acting as support. And when this happens, I go to a lower time frame. In this case, could be like 4-hour time frame or 1-hour time frame, and look for an entry reason or an indication that the market will go to the upside before it continues to the downside. So let's go to the 4-hour time frame and see what happened So when market came to this support level, we have this nice weak rejection. This one to me is an indication that this level is strong and the market is likely to react from this level. And as you can see, we have a push up of more than 100 pips, and that was the prediction that came true. The next is the trade I actually took, and I'm still on this trade, which is dollar Swiss. Dollar Swiss, this one is 4-hour time frame, but I make my analysis on daily time frame. So when we come to this daily time frame, sorry guys for these vertical lines, this is a strategy that I'm back testing, and I might share it with you, when I'm done with that back testing. So on dollar Swiss, we have a market that has been in a downtrend for a long time, making lower lows and lower highs, making a lower low. Actually, this is like a double bottom, and making a lower high, making a lower low, making a lower high, making another double bottom. And what do you see here? We see a market that makes a higher high, higher than the previous level of structure. So in this case, my bias now is to the upside. I see this as a potential reversal, and I expect this market to continue to the upside. So the steps that you take, go to a higher time frame and you identify the key levels of the structure. In this case, my key level of structure is here. It was tested here once, tested here twice. And don't just draw these key levels of structures as single points, they are zones. After that happened, I came here to my lower time frame, which is a 4-hour time frame. As you can see, this market came to this level of structure, again came here, making the first low, making second low, which is the double top, and with this bullish candle. At this bullish candle, this is where I would have entered, but at that time I wasn't at the computer, so I missed out from here. But what I did was to put a limit order, a buy limit order, that when this market makes a pullback to this level of structure, I'll be triggered into the trade and expect this market to go to the upside with about 1-to-1 risk to reward ratio. Aussie yen. The second trade that I took is Aussie yen, and in this Aussie yen, let me go to a daily time frame to make the analysis there. So this is a level of structure that has been tested multiple times, and not only was it tested multiple times, but it is a level of structure that has been formed recently. It has been formed here, this one as resistance, resistance, and resistance here. Every time the market came to this level, there was a reaction. Every time it came to this level, there was a reaction. For the 3 times that the market has tested this level, and there is a reaction, and finally the market broke above this level of structure. So what do you think I'll be waiting for here now? I will be looking for this market to come back to this level of structure, and when it comes back to this level of structure, I will expect this market to find a reaction at this level, at least to the upside, before it continued to the downside. And I normally do that at a lower time frame. Here, let's go to 4-hour time frame. In this case, the market came back to this level of structure, and there was a price rejection here with a long wick of the candle, and there was a push up of more than 100 pips. Again, this market came back again to the same level of structure, making a double bottom. This is the first bottom, then went up, then made the second bottom, and when it made this second bottom, I expected this market to go to the upside before it goes to the downside. And I'm in this trade now. The trade is currently against my direction, but I expect this trade to go to the upside. Or if I lose this trade, it's not a big deal, because I know at the end of the day, if I take 100 trades of the same nature, I'll be profitable. The next is Pound Aussie. This is the prediction I have for next week. Let's go to a daily time frame. Pound Aussie is my prediction for next week. This currency pair is on my radar, and we are on a higher time frame, in this case daily time frame. And what I have to do is to identify the key levels of structure. And the key levels of structure, as you can see, we have this level of structure that the market has reacted to the upside, which is the support level, and this same level of structure the market has reacted at it, making this resistance. And there was a consolidation here at this level of structure. So this one here is a strong level of structure that has been tested multiple times as support, resistance, support here. And another key level of structure is here, is this structure that has been tested here as support. And if we look further to the left, we have this level here tested here as support, 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 and support here. So I have identified my key levels of structure that have been tested multiple times. In this case, what do I look for? I look for a reaction at the current key level of structure. In this case, this market came here and broke below this level of structure and closed below it as well. So in this case, I was waiting for this market to come back to the previous level of structure that has been recently formed or been tested multiple times in the past. And in this case, when that has happened, what I do is to go to a 4-hour time frame or a lower time frame and look for an entry reason. And my indication that this market will continue to the downside is, as you can see, we have one top being formed, we have another top, and bearish candle. In this case here, I expect this market to continue to the downside, either testing the previous level of structure or the daily key level of structure. And this is my prediction for next week. I expect this market to go to the downside, and I'll just go next week on Monday and place my trade to the downside. If you have enjoyed this video, would you give it a thumbs up, subscribe if you haven't yet subscribed, and hit on that bell notifications so that you'll be notified whenever we come up with new videos. Thank you for watching, and I'll see you in the next video.